Welcome back to the Watch List. I'm Tom White, filling in for Nicole Padalides. It's time to bring in our next guest. That's going to be Marc LoPresti, Chief Market Strategist at Market Rebellion. Welcome to the show, Marc.
Good to see you, sir. Thanks for having me.
All right, so let's get your take here. We had a pullback in the NASDAQ earlier in the session. We've kind of pushed that to the side. We've got some weakness in Google Alphabet, AMD. What was your takeaway from a couple of these reports? Because I know the bar was high in Google Alphabet going into the report. It hit all-time highs yesterday. But if you start looking through the numbers, is this like maybe a buying opportunity here, Marc?
Well, I'm not that bullish on Alphabet. I think part of what I read into this report and part of what was a catalyst for the sell-off was the amount of spending, the massive spending spree that this company is undertaking in the AI arms race. That is not a good indication to me of where they are and where they think they are from a competitive perspective. It may be a little bit oversold considering that they delivered obviously positive surprise on earnings, positive surprise on sales. 31% increase in earnings per share quarter over quarter. That's nothing to sneeze at. But I think people are really looking very carefully to see how these names are gearing up. And they're really parsing things out, right? Which is why you see the mega caps starting to trade on a non-correlated basis. You have a day where one is up very big, another one is down, like today with the Alphabet and AMD. Investors are starting to parse the winners and the losers as early as it may be to make those kind of predictions in the AI arms race. And that's a big part of what you saw today with Alphabet as well as with AMD.
Yeah, Marc, do you feel like that's a good omen to have at this point where, you know, you actually have to start looking at the numbers, not everything's going up in a rising tide type of environment that we saw in 2024 and even 2023 at this point, where you've got NVIDIA up basically about, what, 4.5%, 5% or 4% today, and you're seeing some weakness in some other areas. AVGO is having a nice day today. So is that what investors have to start thinking about is, hey, I'm going to buy these things that are maybe underperforming because, you know, Google Alphabet got down to, what, $115 over the last couple of days?
Listen, smart investors, and when we talk to the folks on the trading desks at the big hedge funds and the prime brokerage desks, smart investors are buying these dips, right? Which is why 2025, as we've said before, is going to be characterized by higher highs and higher lows. So when these really expensive stocks have these corrections, and they tend to be significant. I mean, 8% on Alphabet, almost 9% on AMD today. Those are not insignificant moves for names at that level. And smart investors have been almost categorically taking advantage of those buying opportunities. And I expect that to continue. But I think it's less about that we think that it's time to start to anticipate who the winners and the losers are of the AI arms race, as I like to call it, and more about, hey, look, all of these names, most all these names are up so much. Are we that surprised to see some profit taking? Are we that surprised to see that sensitivity around these valuations? NVIDIA, one of my favorites, a stock that we're bullish on, 44 times EPS. Is that an expensive stock? Of course it is. So don't be surprised when you start to see these little headlines. And we could talk about DeepSeek until the cows come home because I'm like on a rant on that one. But I'm not surprised to see these kinds of corrections or these kinds of sell-offs that are met often the next day by being bid back up. And I think we're going to continue to see that.
Yeah, and we're seeing that in NVIDIA. A couple days ago, this thing got down to $113 at this point. You say you like it here with the stock up 4%, back above 123 mark. Is this what people have to start thinking about, where we know that there's going to be slower growth rates for NVIDIA, but if they're talking about that they're sold out of their chips for the next year, year and a half, you know, eventually you're going to have to start looking at valuations. You mentioned it's still got a high valuation, but not as high as maybe some of the other names in the space.
Yeah, I mean, a lot of analysts, and I tend to agree, think the valuation of this name is justified. I think it was a tremendously oversold condition on the DeepSeek news, which I found to be incredulous. A lot of folks that we talked to said this is not news. We were hearing rumors about this as early as the third week of December, or even beginning of January. I think this was a lot of reason for market watchers to put a face to what was otherwise a momentum-driven correction. We saw a very significant sell divergence indicator on our technical charts that we watch on Friday that was indicating that we were going to see that sell-off on Monday morning. Had nothing to do with DeepSeek. So I think NVIDIA got way too much of maybe the baby being thrown out with the bathwater on that one. Most of the streets expecting at least 30%, if not more, growth between now and the end of the year. As you mentioned, their Blackwell chips are more than 100% accounted for. It's sort of like they've gotten into the airline business. Let's just, sell more than we have and figure it out after the fact. And they are, as it turns out, I think, continuing to be one of the clear leaders when it comes to chips that are powering that AI revolution. So is it expensive? Sure. Do I think it has room to go up from here? Yes, it does.
You like NVIDIA here. It's pulled back from those all-time highs above $150 a share. One of the names, it wasn't in your notes, Mark, but I wanted to get your take here on Microsoft, where, it's basically down about 12% from its all-time highs that we saw, and that was the middle of last year. This thing seems to be like dead money in a tight range-bound trade here at this point. Is this also due to the fact that, hey, Microsoft came out and said we're still spending $80 billion on AI infrastructure build out this year, and that might be weighing on shares at this point, or is this an opportunity?
Listen, it is, and this is not, in all candor, this is not a stock that I follow that closely because of the way that it trades. We like to trade sort of some of the more volatile names. Yeah. I think the investment that they made on the infrastructure side, and by the way, that's on the data center side of things, that is a completely separate story and an important one. It's one of the themes that we really like for 2025. I actually co-authored a research report that we published in December covering this whole concept of this energy revolution catalyzed by the data center explosion. And it is really a very, very significant thing that's going to create a hell of a lot of opportunity for companies, not as much as companies like Microsoft, which is sort of your grandfather's Oldsmobile of the AI names, right? If you'll excuse the pun. We're a hell of a lot more excited about some of the companies that are advancing technologies to help provide solutions to those data center energy problems, whether it comes to data compaction, edge computing, alternative energy. We're looking at some of the names in nuclear, the small modular. One of our best performing names in the book last year was OKLO, which is up again, I think another 8 or 9% today. So when you can make money in those names, why fight it out on Microsoft? It's not interesting to me.
Yeah, OKLO hitting all-time highs today.
Yep.
We mentioned valuations earlier, and you mentioned you like volatility. Well, I'm going to throw out Palantir for you because that stock hit all-time highs yesterday, post-earnings. What's your take on this one? Because you talk about valuations that are through the roof. This is one of those names, but everybody likes it because the growth rate is there moving forward. But at the same time, at some point, the rubber's got to meet the road here as far as valuations goes because, it's still fairly overvalued, in my opinion, if you look at it just on a fundamental basis.
Well, a lot of folks on Friday were saying that it was highly overbought and they were not expecting it to do what it did on Monday. That wasn't the case if you were tuning into one of our shows that we did on Friday at Market Rebellion, but that's a whole other conversation. Look, I like this one. This is another one. I get it. It's expensive. Their growth trajectory. Look, as you know, this is a stock that traders love to hate for a long time after the IPO, sort of finding its footing. Are they reliant too much on government and the defense sector and not enough on the private sector? They have figured it out. Their growth trajectory is pretty darn clear. They have a very clear AI deployment strategy, and we think this thing can go even higher. But like with all of these things, look, we think it's going to be a good year. We're bullish on the year in general, right? Mm-hmm. But like most things in life, it's not just going to be a straight line up and to the right. So when you want to get into some of these names, buy them on the dips. Yeah,
it seems like we're still best in breed here in the U.S., and as long as this macro environment stays the way that it is, jobs market, GDP growth, and consumer spending, maybe some opportunities out there on some pullbacks. All right, great discussion, Mark. Appreciate it.
Always a pleasure, sir.
All right, that's Marc LoPresti, Chief Market Strategist at Market Rebellion, joining us, breaking down the tech sector. But now let's take a quick break. When we come back, we're going to have Alan.